1 year in crypto world is like 5 years in the old world.
I know.
And if you live through if you live through 2 bear phases, it just...
You get gray hair.
You get gray hair. It's exhausting.
Yeah.
So, again, we'll go from 70 to 100. We'll be writhing around and everyone will be like, oh my goodness, at the top, it's going to break out and then it'll collapse. And then at 70, people will be like, oh, the bear market's over, and then it'll explode again. And so I think we're in that period.
Okay.
And then when we go through the highs, we'll head up to, I think, 180, which is 3 times the previous peak.
The crypto market moves at a speed that would give traditional investors whiplash. A single year in digital assets can feel like half a decade in legacy markets. Boom, bust, reinvention, repeat. Those who have endured multiple bear markets know the toll, the sleepless nights, the emotional whipsaws, and yes, the premature gray hairs. Yet this relentless cycle is also what makes crypto so exhilarating. Prices don't just rise, they explode, collapse, and then defy expectations all over again. Right now, we're in that volatile sweet spot where disbelief turns to euphoria, only for the cycle to reset once more. Dan Tapiero captures the current moment perfectly. We'll whip between 70,000 and 100,000 as traders alternate between euphoria and despair. His analysis suggests Bitcoin could ultimately reach $180,000, but not without the gut-wrenching corrections that characterize crypto's boom-bust nature. These violent swings aren't bugs, they're features of an asset class that rewards patience and punishes impulsiveness. What makes crypto extraordinary is its ability to compress years of traditional market action into months. The current cycle mirrors previous patterns, just on a grander scale. As Tapiero's prediction implies, we're likely entering another phase where disbelief gives way to mania before the inevitable reset. For those who understand this rhythm, crypto's chaos isn't frightening. It's the sound of opportunity knocking at hyperspeed. Stick around as we bring you more clips from Dan Tapiero's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
Well, actually, some people think Bitcoin is digital gold.
Yeah, that is true.
And it's funny because, I don't know, 5, 6, 7 years ago, there were many players in the space, in the crypto blockchain, whatever, Web3, digital asset space, who are attacking gold, right? And I always thought it's crazy to do that because the people who are gold investors, they're some of the early, or should be the early adopters to Bitcoin, because some of the fundamentals that drive a position in gold, like for instance, you're long gold because you're worried about debasement of fiat, right? Or you're long gold because you're expecting liquidity to come from, interest rate drops. A lot of those things also drive the Bitcoin price. Whereas a stock investor, typical long-only equity investor, is looking at the balance sheet, income statement, meeting the CEO. To think about currency or a hedge for the debasement of fiat is not really on their mind so much. I'm a big believer in gold. I think that gold is the best hedge for the traditional system. If you're long a portfolio of stocks, bonds, commodities, currencies, whatever it is, I think gold is a great hedge. Like every traditional portfolio, and I mean, whether it's a 70-30, 60-40 mix or 70, 20-10 or whatever the mix is, you should have 5 to 10% of your portfolio in gold. So I think it serves that purpose. To me, Bitcoin and the digital asset world is, I would say, a hedge against the old world. I think that, if you look at any digital asset, it's outperformed anything in the traditional world dramatically over the last 10 years. And this is something that is very hard for people to understand. So what do I mean? If you go back 10, 11 years ago, the NASDAQ, which has done very well over the last 10 years, is actually down about, over 99% against Bitcoin. It's also down 99% against Ripple. It's down 99% against a lot of digital assets that you might not even think are worthy. And so I find that very interesting. It's almost I see the digital world holistically, the digital asset ecosystem. That's Bitcoin, Ethereum, all the alternative alt currencies, if you want to call them that, or alternative protocols, other blockchains, and all the equity of the businesses in the space. Mm-hmm. And so that whole world has been appreciating against the old world of real estate, stocks, bonds, in a really dramatic way. And so I have that sort of really from 20,000 plus feet up perspective on, and as an investor, it's more of an investment perspective. I want to be in the next 10 years in things that are going to appreciate. I think you're losing tremendous purchasing power if you keep all of your assets only in the fiat world. So gold, for instance, which I love and which is a hedge to the traditional world, gold will also go down tremendously versus Bitcoin, ETH, and many of the other assets in the digital world. And I think many gold guys have a little bit of Bitcoin, but the thing is that's really different about it is the average age of the gold owner has got to be something north of 50 or 60. It's a very old market. Mm-hmm. And Bitcoin and the digital world, the average age is like 30. And there's a lot of energy there. And I think, sometimes you read on X, people talking about, we, the OG Bitcoiners, and I don't mean me, just generally OG, we memed Bitcoin into existence. We willed it into existence. And I think, things move as a result of energy. Mm. And the energy in the gold space is weak. It's not great. It's older people, guys who've already made it. There's no dynamic interaction. I mean, in the crypto space, you've got a conference every single week, and there are thousands or hundreds of people.
Side events,
you can't even go side events. You go to Singapore 2049, there are 800 side events in 2 days. There is so much energy. People, really, it's not just pushing a narrative. Mm-hmm. People have committed their life to Bitcoin becoming an integral part of the financial system and our whole economy. And it's even bigger than that. I think equity as a form of ownership of business and of savings allocation isn't going away overnight. Mm-hmm. And on the other hand, I think everything of value is migrating on chain. Mm-hmm. And so I think in the next 10, 15 years, everything of value will be put on a blockchain. Yeah. And it will all be fungible with each other. And this movement with RWAs, I think, is sort of the beginning of it. This seems to really be picking up momentum. Mm-hmm. DeFi has definitely exploded again. And there's starting to be what I call growth stage protocols. So protocols that are, producing $200 million in revenue, where the value or the revenue doesn't accrue to an equity, it accrues to the token. Like, Aave would be a perfect example. Mm-hmm. And so I think we're moving in that world. But on the other hand, we're not getting there tomorrow.
While gold bugs tremble over the collapse of fiat currencies, Bitcoiners are out here laughing all the way to the bank with a 100x lead over traditional assets. The Nasdaq is down 99% compared to Bitcoin in just 10 years. The energy behind crypto? Pure chaos, global conferences, DeFi shaking up the entire financial system, and believers who won't stop until they've torn down every financial structure that's ever existed. Gold might preserve wealth, but Bitcoin builds it like nothing you've ever seen. As macro tides rise and lift both, one thing is clear. The future of value is no longer locked in dusty vaults. It's written into every line of code on the blockchain. Trump's shock pro-crypto turn is just the start. A massive shift from outright hostility to a full-blown White House endorsement. America is gearing up to become the global blockchain capital, unveiling a Bitcoin roadmap that will send it soaring to $1 million over the next decade, bringing with it a $20 trillion market cap. The crypto market's $2.7 trillion is only the beginning. It's about to explode 10 times to $50 trillion as traditional finance finally merges with the untamable beast that is on-chain assets. The clock's ticking. Either adapt or watch the financial revolution leave you in the dust. Let's watch more clips from the interview.
one of the things we haven't talked about yet, I mean, probably the second most important development in cryptocurrency since the white paper to me is this shift in the Trump administration. I mean, we have gone from the most negative environment.
U.S. founders leaving, and now they're coming back.
Right. To the most positive. And it's not just, well, okay, we rejected Gensler and all of that. It's the complete opposite. It's we reject that and we're all in. And if you know, I was at the digital summit, yes, in DC, and it's incredible to hear Hester and Cynthia and all of these people down in DC who have been pushing hard for Bitcoin and digital assets, crypto, to become more acceptable, more acknowledged, elevating the profile in DC and on Wall Street, that now there's a voice. I mean, everyone in the administration owns cryptocurrency. Trump himself, he spoke at DAS 2 weeks ago, which was great. I know it was just a Zoom call in, but it was fantastic.
It still is something, yes.
It was great to have a president call into a cryptocurrency conference.
Yeah.
I mean, that's crazy. Think about, would Biden have done that? Would Obama have done that? I mean, no. And so
they didn't.
No, of course not. Of course they didn't. They were the other way.
Would they?
They were like, no, they thought it was all about fraud and money laundering, and they just didn't do any work and didn't understand that it was an important new technology.
Yeah.
So, you know, his objective, and this is very important, Trump's objective, as far as I can see, is to make the U.S. the global crypto blockchain hub for the world. And so from my perspective, okay, I'm talking my book a little bit, but how do you do that quickly? Well, you encourage the large companies to go public here. I've been thinking about 180 on this cycle. And I'd always thought, even in 23, 24, we're going to head up to about 100 and then we're going to stop. And people would say to me, well, Dan, why are we going to stop? This is when we were at 20, 30, 40, 50. I was like, we're going up to 100. We're going to break through 60, which was the old highs from 21 or 65. And then we're going to stop at 100 because financial markets like to stop at big round numbers. You know, the Dow stopping at, 10,000. You know, or the S&P stopping at 1,000 or NASDAQ. And it just, I don't know that it makes a lot of sense. There are a lot of things about markets that are irrational and don't make sense. So you have to, if you've been in the markets a long time like me, you have to accept that. But I think 100,000 is a number where people who have been long for a long time, from $1, 100, from 1,000, where they in their mind just said, if it ever gets to 100,000,
I'll sell.
I'm going to sell some. And I'm not going to necessarily sell all, but you can imagine if you'd owned this at 200, 500,
not bad.
And if you bought it in 2019 at 5,000, 6,000, 7,000, even if you bought it at 10,000, you're like, you know what? If it goes up 10 times, I'm going to buy that house, you know, that I've wanted to buy. So there's a natural, I think, selling, ceiling that will take time to digest. Now, I mean, weeks, months, I don't know. I just knew that at 100.
We slightly passed 100.
Not really. It was just a spike up. 100 has held it. And then I think you go up and down between 70 and 100 for months. Everyone gets exhausted again.
What's your selling point?
So, well, I don't think about, I have mine off and I don't think about it. It's more about time. Like I think 10 years. I mean, I don't really have one. I think we can get to 1 million on Bitcoin in 10 years. And I think it'll stop there for a while.
Yeah.
1 million, 10 years. So that's $20 trillion of value. And I think that's the right number. The fund that we're launching now, 50T, is a view that 10 years from now, we have 20T in Bitcoin. We have 10T in all of the other alternatives outside of Bitcoin. And then we have 20T, and this may be optimistic, but I hope, in all of the equity and businesses involved in the space. So what isn't a cryptocurrency, you have all of these businesses and all these other activities that I think the parts of the traditional world will merge with the digital world. And so there are companies today that are in the traditional world, that I think will 10 years from now be considered digital businesses. Blockchain oriented. Right. Their whole businesses will be on the blockchain. They'll be blockchain businesses. Yeah. And so that's 50T, 20, 10, and 20 added. 40, I think 10, the value 40. Of Bitcoin at $1 million per Bitcoin is $20 trillion.
Okay, yes.
The value of all non-Bitcoin cryptocurrency, I think, will be another 10 trillion. Okay. So that's 30 trillion. And then
total will be 50.
And then 20 more for all of the businesses that'll be active in the digital asset space. So that's how I think it sort of spreads now, and it starts taking over all the traditional world businesses, not just financial businesses. Yeah.
The existing market cap right now is like 2.7 trillion.
That's just of the cryptocurrencies.
Yes.
It was around 3, and then the businesses, I would add another trillion. Okay. If you include what the value of Binance is, and if you add all them up, it's probably another trillion. So it's like 4 now. It was 5.
So it's like
a few months ago.
13x from where we are currently then.
Well, I would say a 10x. I'm thinking from where it just hit 5.
Sure.
5 going 10. Okay.
Bitcoin is showing early signs of decoupling from traditional assets like gold and stocks, reigniting trader optimism for a rally toward $100,000. Despite initial volatility following Trump's global tariff announcement, Bitcoin rebounded sharply while the S&P 500 tumbled and gold retreated from its all-time high. This divergence echoes a 2018 to 2019 pattern where gold rallied first, followed by Bitcoin's explosive 500% surge, hinting at a similar handoff that could propel Bitcoin to new highs, as Dan Tapiero suggests. However, caution lingers. The Bitcoin-to-gold ratio suggests a potential bear trap, with historical fractals pointing to a possible drop towards $65,000 if macro conditions worsen. A U.S. recession or prolonged high interest rates could dampen bullish momentum, though Fed rate cut expectations later this year may offset pressure. As analysts discuss the future, one view supports the idea of a digital asset revolution, where Bitcoin's long-term potential is clear, despite short-term ups and downs. The current separation could be a sign of Bitcoin's next big rise, but traders need to manage short-term risks to take advantage of the eventual growth. As we wrap up, do you believe Bitcoin will hit $1 million in 10 years, or will another technology steal its spotlight? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.